Good morning. It's Tuesday, July 16th, about 6 a.m. Central Time. Overnight, the precious metals are stronger after yesterday's mixed session. Overnight, gold futures climbed $15 and are within striking distance of all-time highs. Silver futures continue to consolidate. I believe that opportunities present themselves most in that silver arena. Now, after Jerome Powell's presentation yesterday, the swaps covering interest rate expectations maintain about a 100% chance that the Fed will make its first interest rate cut in September. Now, the meeting is September 18th, and if you go to the CME's Fed Watch tool, you can see there's an 87.6% chance that the Fed will cut 25 basis points. There's even 12.1% chance that the Fed will make a 50 basis point cut and a 0.4% chance that the Fed will make a 75 basis point cut. So they're really expecting a couple things: inflation to come down and also the data to just really continue to deteriorate. Now, today we're going to see retail sales, and they're expected to come in at negative 0.2%. Retail sales are a big component of people that are looking to analyze how the consumer is doing. We'll also see industrial production and Beige Book tomorrow. Beige Book gives an insights of what the Fed's last meeting was like, followed by those initial claims on Thursday in Philly Fed Manufacturing Index. So we're going to want to really watch retail sales and then also initial claims. So the two questions that really every kind of metals trader should have on their mind is how much of the interest rate cuts are priced into the market, especially the gold market. And I think that with this new revelation of now a 50 basis point interest rate cut, that's what put this gold market overnight up near those higher levels here, up near those resistance points. Now we're also gonna have to ask ourselves the second question is, where are the ETF investors and when will they return to the market? And I really think that ETF investors are going to awaken, especially when they start to see that gold futures are at or near those all-time highs. Traders love chasing momentum, and headlines of new record highs could bring silver and gold back into those minds of the people that were looking for 2,500, 2,700, 3,000 gold, 35, 40, $50 silver. So if you look at gold, it's really built a solid foundation at the 2,300 level, and I think you really mark that as your line in the sand. You're going to want to use the July 9th low, 2356, as your new kind of first warning sign that's out there. And I do recommend that if you are on the future side, if futures trading is appropriate for you, look at some of those smaller contracts, those 10-ounce contracts where you could scale in. Now, on the silver market, because of the fact that it's consolidated, and we'll have to look at, there was a lot of talk about, with Donald Trump and J.D. Vance and their views on China, saying that China is the biggest threat right now to the U.S., and they were proposing a 60% import tariff, which could affect China's GDP. China, if they continue to slow down, it could impact some of the demand for copper and silver and things like that, and that's why I'm merely speculating that maybe those prices haven't had that same reaction that the gold market did overnight, as the gold-silver ratio about 78-1. So your technicals on the silver market, they're bullish, but they're consolidating. And I think you use the July 5th low, 30.45, as your pocket support up to Friday's low, which is 30.62. So talking about 75 cents lower from here. The 50-day moving average comes in at 30.11 and the trend reversal point 29.44. The fundamentals, if you look at like the Silver Institute, they project a 2024 global supply deficit of 265 million ounces. That's the second largest one for silver in the past decade. The ETF holdings, and this is what I'm talking about, is that if you go back to 2022, it was Q2 2022, it was 950 million ounces were for the ETF holdings. Right now, we're only sitting about 800 million. So we're significantly off those recent highs here. If you do see the pickup in solar demand, that's made up about 232 million ounces expected in 2024. So if you looked at from 2015 on up to about 2020, we were on that solar demand was about 60 to 100 million ounces. It's really been since 2021, 2022, and now 2023 that number's gone like that, and that's where it really starts to kick in and really strains that supply of silver that's out there. Remember, the strong demand, the lower supply, you get the monetary policy tailwinds from a 25, 50, 75 point basis point cut. You're going to see gold futures go up. silver futures would need to react that way. The dollar index should be lower, and the dollar index has really broken down recently, and 2-year treasury yields have fallen off a cliff. So I think your longer term strategies, you find value in silver on any kind of steep correction. Look at the December contract if that gets a break below the $30 range. And then also we're looking at things like call spreads again in December, going farther out here, looking at $35, $40 strike price call spreads. So if that is appropriate for you, you're going to have to look at your own specific risk reward, things like that, how you trade. Now we're going to be keeping an eye on any kind of more developments regards to policies that one candidate could bring to the table and how it can impact things like that. So silver futures making a new high right now, up 21 cents, 31.15 as of this recording. And then if you have any questions, give me a call. I'll be on the Schwab network here shortly at about 7:05, 7:10 Central Time. So you got any questions, give me a call, 312-858-7303. Remember, futures and option trading involve risk of loss, may not be suitable to all investors. Good luck, good trading.